Everybody and their grandmother is talking about one thing, and that's Pyth. 7 days ago, a video on the Paul Barron network around the airdrop. 4 days ago, a deep dive on fundamentals by Invest Answers. And look no further, 1 day ago, even Coin Bureau talking about it, Pyth here being in the title. Now, I'm not going to bore you with the content that you've already seen. I'm not just going to read from the website. The TLDR is that Pyth is a data oracle directly competing with Chainlink. But as said, there are more than enough videos on the fundamentals of Pyth. We are going to look at the things that really matter. How much developer activity is there? How many transactions are being made? How many fees are being generated? What's the supply schedule? As in, how much new additional supply will hit the market, potentially depressing the price? We're going to look at the drivers of supply and demand, which in the end should result in the price. First data point you probably haven't seen yet. What's the developer activity? This is GitHub, and the team is working frantically on this. One changed the code base 1 hour ago, another one 5 hours ago, 11 hours ago. People are working on this non-stop. But the big question is always about valuation. How fair is Pyth currently valued? And for that, we can simply look at how many fees are being generated. Here are the fees measured in SOL tokens. Let's be super optimistic. Let's go with the very favorable assumption that every day from now on, we will see 168 SOL tokens being generated in fees every day. So that's not the current state, right? The average is lower, but simply let's work with the positive case. 168 times 55.35. That's a daily fee generation of $9,300 roughly. And let's multiply this by the days of the year. 3.4 million US dollars in fees. Now there is this idea in traditional finance of a PE ratio, right? Of a price to earnings ratio. And let's take those 3.4 millions as earnings and let's multiply this with a PE of say 30. That's also comparatively generous. Doing that gives us a fair valuation of Pyth of 100 million roughly. Now what's the market cap currently? 620 million. Fully diluted, even 4.3 billion. We're going to look at the dilution later. So off the bat, we can already say that the market is pricing in a lot of future growth. We already made an assumption of roughly 3 times the current average revenue. We made an assumption of a 30 PE ratio, and still we get an overvaluation of 6x just with the non-diluted market cap. Now, crypto isn't just about fair valuations, right? Crypto is about narratives. And one reason why Pyth is doing so well is because Solana did very well recently. And of course, Pyth was an airdrop on the Solana chain. What you're seeing over here is the SOL price relative to the Ethereum price. So this is not the US dollar chart. This is Solana in ETH. And in the last roughly 80 days, we saw an outperformance versus ETH of 143%. Thus, a lot of assets on Solana are now outperforming Bonk, for example, meme coin Bonk being one of them. I made a video on Bonk just recently. Feel free to check it out on this channel. Now, seeing Solana outperforming that much is actually quite surprising, given that the total value locked, the capital locked on the chain, is not increasing that much. This is the total value locked in US dollars, and here is the total value locked in SOL tokens. So even measured in the native token itself, we don't see more DeFi usage. And that's again DeFi Llama measuring across several decentralized apps. Here's the number of monthly successful non-vote Solana transactions. Also, it's not necessarily increased adoption. It's not necessarily increased usage. So it appears as if Pyth is simply one hype built on top of another hype, 2 hypes levering on top of each other, creating all of that performance, creating all of the tension, especially with that airdrop. I will tell you why I think we can ignore a lot of the fundamentals, like what kind of price feeds it has, or how it derives those price feeds via regression over all of those different data providers, or how the data oracle market is really centralized. There's only Chainlink, and all competitors have very, very little market cap. Teller being the second largest, but that's also mainly due to manipulation of the price on the derivatives market. Made another video on Teller, on TRB as well, actually several of them. Feel free to check them out as well. I think one of the main reasons why Pyth is doing so well is because it has so much support by the centralized exchanges. Look at where you can trade this. This is the spot market. It's available everywhere. And this is the derivatives market. You can also trade this everywhere. 105 million of perp trading volume on Binance alone. another 74 million on Bybit, another 45 million on OKX. And the funding rates are not too extreme in either direction. So in other words, there's no real consensus, no real market consensus if this is now an inflated price or if this is relatively low. This is super good for the centralized exchanges because they don't have to hedge their bets and they make all of those trading fees with the perps. We are currently in altcoin season, and with altcoin season comes a lot of very strong outperformance, and especially when centralized exchanges push this as well with their derivatives contracts, this can go on for a while. The main point here is for a while, not forever, because the Oracle market is incredibly hard to disrupt because reliability of data is super important. Why do you need those oracles? You need them, for example, for borrowing and lending platforms, so that the borrowing and lending platform can estimate how much is your collateral worth. Now, if you deposit collateral on a DeFi platform and you borrow against this, and the value of your collateral is not estimated the right way, maybe the value is overestimated, then you could just deposit a lot of that and drain the whole pool. You could drain the entire protocol from their funds because you can simply just deposit all of that mispriced collateral and pull out everything. In other words, a positive track record is super important, and you don't just play around with your price oracle simply because so much is hanging on this. One simple bug, one simple programming error, even if it's just temporary, can completely destroy your protocol. So as said, I believe this rally can continue with the centralized exchange support. But long term, there is a problem, especially when we look at the token unlocks. Check this out. We currently have 1.5 billion Pyth, but 1 year from now, this will more than double. So if the demand of Pyth tokens will not more than double within the next year, then the price will go down. And these kind of cliffs we have several times. Now this is bad for Pyth long-term holders if Pyth cannot instantly take away all of that market share from Chainlink, which is highly likely. But it might be good again for the centralized exchanges, because what happens during cliff unlocks like this? A lot of people will be betting on falling prices with the derivatives contracts on those centralized exchanges. 1 year from now, a lot of people will see that the supply will increase. A lot of videos will be done around this. People will buy the shorts, will bet on the falling prices. And then the centralized exchanges can squeeze all of those shorts. They can buy up more and more of the token, generating nice liquidation fees as well. Did I promise you too much that you will see things here that you don't find on other channels? If you appreciate this, give this a like and feel free to subscribe as well. I publish videos here regularly. There's also a free Telegram channel, link is down below.